Hello traders, today is the 10th of February 2013 and the time in London is 58 minutes past 7 p.m. In New York, 58 minutes past 2 p.m. Happy Sunday to you all. This video is about, okay, Fibonacci trading challenges, okay, Fibonacci trading challenges, because when we are trading, we face a lot of challenge, and I know a lot of traders, okay, have spent a lot of time learning by heart, okay, this subject of Fibonacci pattern, the Gartley pattern, butterfly pattern, and they will tell you that I know all this, George. I have more experience than you, and then you don't need to tell me anything about the Fibonacci patterns. That's true. These traders know this by heart, but because they have a lot of difficulties to make excellent decision when they are using the pattern, they may be discouraged about this pattern. But this is the challenge that we face. That's why we titled the video Fibonacci Trading Challenges, and I will show you the challenge that a trader will face because this stock Orly, O'Reilly Automotive Incorporation, America stock, Epic Oscar Romeo Lima Yankee, ORLY, America stock, the name is here. And we are on the monthly chart. The challenge that traders are facing here is about the Fibonacci trading challenges. We see that the price went up from here to this level here. And then we see a profit taken. This is one of the primary condition for, a bearish Fibonacci pattern. Generally speaking, before you see a valid, bearish Fibonacci pattern, you must see an up move and then a correction. If you end up seeing, a bearish Fibonacci pattern anywhere else, it is in the wrong place. Another thing you have to understand, a bearish pattern will take place at the end of a bullish trend or at a value resistance level. So we know the condition. So here the price went up, and then there was a profit taking, not 100% profit taking. And then now the price went up to, 78.6% Fibonacci retracement level of the SA. This is S, this point here is what we call X, this point here, that's what we call A. So A to B is now at 78.6% Fibonacci retracement level of the SA. So price went up, profit taking, and then people buy again into 78.6% Fibonacci retracement level of XA. Now we see it. You can see that the price in fact went even to the 88.6. You see it went all the way to 88.6 before closing just below the 78.6. The black line here, that's the 78.6, but the price went even to the 88.6. There's nothing like exact in the market. So at this point in time, that's where the price is today. This is what we are talking about, the challenge. Is it going to form for us? The first thing coming to our mind, those of us who understand the Fibonacci pattern, we see the first condition, we see the second condition, now the price is at 78.6. Which bearish pattern is coming to our mind? The butterfly, the Fibonacci, the bearish butterfly pattern. That's the first thing coming to our mind here. But we don't know whether the market will definitely form the bearish butterfly pattern. But here, this is what is coming to our mind. So we'll highlight it. If we receive a sell signal here, we will take it. But the price going down, the price looking for a better support level, the next target zone is here. Will it reach this level? No one knows. You want to sell? Check the balance sheet. Check the S&P 500. The market first, the sector before the individual financial instrument. If the sector is bullish, if the leaders in this group of stock are bullish that day you are selling, they may provide fuel for the stock to go back up. The market, the sector, individual financial instrument, using the trading triangle with the technical and the fundamental is the right way forward. A lot of money has been wasted in this messy market. Not because traders cannot trade, but because sometimes traders can be lazy. Like myself, I was lazy before, but the professionals are always very, very conservative and they don't want to lose. If you are employed by one of the investment banks to trade and you keep having a lot of losing trade, they will sack you. But That's why professionals are very, very careful. But because the ordinary traders are trading with their own money, like myself, okay, you see? So sometimes you can get into trouble if you just jump on it and try to force it and say, this is going to be, especially if you are a new trader, you want to, okay, avoid these mistakes. So here, how do we handle it? You want to sell, the price must come out of a bullish channel first. Okay, so you see in here, okay, let's go now to the daily chart and see whether is it at least. Let's go to the daily chart because it's the laziest time frame for those who are swing trading. Look. What's happening here? The price, in fact, the move from here was on straight. You see, it went up like this and then gap up recently. This Thursday and Friday, Thursday gap up big to reach this level. When you see a gap, the gap is always a distortion. Doesn't matter whether a continuation gap or exhaustion gap is a distortion. You need to be very, very careful. Check the volume below. Understand the language of the volume, what's going to happen next. So here, when I see gap like this, I'm very, very careful. All right? Trader will draw the median line of the gap. So the gap from here to here, they will be watching the median line of the gap. But we can use the TSTW24 if the market's open, okay, on Monday or, okay, when we are trading, to watch the first beta frame to see what is likely to take place here. But here, right now, trader will be looking for opportunity to sell. But so far, the market is bullish. It's just here like this. So you want to see at least, okay, the first lower high in whichever time frame you are not. Suppose, okay, you are somebody who is always stuck on a 50-minute chart. You see there's a gap here still. Price went out, display high low. It's coming now below the previous high. It's telling that there's a kind of weakness taking place here. We can work with that. So if you roll it down a bit and come back and retest this one, give us a sell signal on the 50-minute chart that I am now, I'll be happy to take it, placing my stop loss here. It's not a stupid decision. It's a low-risk decision. It doesn't mean that it will definitely work, but it's low-risk decision. But as I explained to you, right here, talking about the challenge of, okay, Fibonacci trading challenges, you see, at this point in time on the monthly chart, some aggressive traders will place order here straight away to sell if they have excellent money management in place. All right, that's not bad, but they will place that stop loss probably here. You won't be surprised on the next trading day, the price may gap up and just reach this level here. All right, but trading a Fibonacci pattern, okay, we are expecting something, okay. We do not impose it on the market. That's the challenge. We don't want to impose it. So we know that it may be, okay, a bearish butterfly pattern, which means the price has a high chance to pull it down from here all the way to 38 point, all the way to either 38.2, 50%, 61.8, even down to the 88.6% Fibonacci retracement level of the move from A to B. That's the criteria for B, C, in relation to A, B, because this is A, B, C. So we expect the B to C to be between 38.2 and 88.6% Fibonacci retracement level of the A, B. We know that, but we will not, you see, do not force it. Now, if you start going in a decline channel on the 30-minute chart, on the 50-minute chart, you will take advantage of it step by step from one level to the next level. If you reach your target, it may stop at 38, it may stop at 50%, it may stop at 61%, it may go even down to the 100% before return back above again the 88.6%. Check the balance sheet, go to Google Finance, go to Yahoo Finance, type in Orly, okay, O'Reilly Automotive, check on the internet, what's happening now? Are they going to administration? I don't believe so. Now, I'm talking, all right? Is any litigation pending on them? All right, check it, all right? Check the cash flow, check the balance sheet, check the S&P 500. The S&P 500 is above 1500. All right, if the S&P 500 is bullish, we give priority to bullish setups. Check the market leaders of the Nasdaq 100, Google, Apple, check them. And they will influence, okay, the stock on the Nasdaq 100 because the stock belongs to the Nasdaq 100. You see now? So this is about the trading triangle, the challenge of Fibonacci, okay, Fibonacci trading challenges. So when we see it doing exactly what we expected, we will take advantage of it. If it did it exactly here, we will take profit. In fact, we'll take profit at each, okay, support level. Do not force it that definitely will come here. If you take a signal, the signal fell, come out. But though we are here, we are thinking of a butterfly pattern. If the move continues just to come to retest this previous high here, do not be surprised. Break a ball, retest, turn around. Can happen that way. Instead of going this way, can go this way. The only reason why we lose is because we think that it's going to go down and it goes up. All right? So you want to be drawing your warning lines. If you want to sell, do not just sell because you're expecting it to sell. Because you think it's going to be a bearish butterfly pattern. You want to wait for a clear-cut signal. You want to wait for a bearish cycle. You want to wait for a bearish trend. You want to see the first lower high. You want to see a bearish channel. You see? So this is the challenge that we face when we are using a Fibonacci pattern. So if you come here, we receive a buy signal or somewhere here, display higher low. While we are talking about display higher low somewhere in between this line, we will take it. Holding up, next target zone, resistance, first and near resistance level. Though the bearish butterfly pattern will be completed right here at 1 to 7% Fibonacci extension of the SA. S, A, B, C, D. The C to D for the bearish butterfly pattern is completed at 1 to 7% Fibonacci extension zone of the SA. So, trader will be saying it's going to be, aggressive trader will be saying it's going to be, it's definitely a bearish butterfly pattern being formed here. It's, you don't know. It's not for certain. It's not guaranteed. The price can just go straight here. So, but if he's drawing this beautiful bearish butterfly pattern, we'll take advantage of it. If we come to the completion of the target, we'll give priority to sell signal here. But again, we will have our warning line. If you break above the green line, retest it, game on. So we start thinking of what? We will say, well, it may be now a crab pattern. All right, so we will project, move our target from this level of 1 to 7, okay, all the way to 161%. The market is dynamic, and these are the challenges that we face every day, okay, when we are using, okay, the Fibonacci pattern. I hope you have enjoyed this video also about, the Fibonacci trading challenges that you will put into use, okay, to make excellent decisions. To summarize, do not impose the pattern on the market. Do not be aggressive. Trade the price. Keep eyes on the price. Take it step by step to make excellent trading decision. We are the TSTW S008 traders. Until the next time, enjoy yourself and be very happy. Thank you.